the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, welcome to the Jet Setting Advisory Podcast. I'm your host, David T.U., and we are absolutely thrilled to have Suzanne Mariga as our guest today. Suzanne is a CPA, a fractional CFO, and the visionary CEO of the Mariga Group, a renowned firm known for its success in high net worth strategies specifically tailored to the 7- and 8-figure entrepreneurs. With their mastery level expertise in the profit first system and extensive experience at leading firms like Arthur Andersen and KPMG, Suzanne brings a unique blend of strategic tax planning, wealth optimization, and business growth to the clients that she serves. She's also the author of The Profit First for Minority Business Entrepreneurs and Enterprises, and is a publisher, weekly editor, part of the Publisher's Weekly Editor Pit, and as well, host of the popular Profit Talk podcast. And so again, we're absolutely delighted and so excited to dive into Suzanne's expert perspective on building wealth, tax planning, and securing financial stability in a global environment. So welcome.
Well, thank you, David, for having me. I'm so excited to be joining you today.
Absolutely. So all the things that I just gave the intro on regarding your background and what you currently do, I'm absolutely excited to find out more about this. And I'm sure our listeners and viewers are also the same. So Suzanne, let's get started. You specialize in high net worth strategies for 7- and 8-figure entrepreneurs. Can you share the most common mistakes that you see entrepreneurs do, especially during their entry level beginning time, making their finances and how they profit, and explain to us what the profit first system is to be able to help them, provide them a value add and avoid mistakes that they commonly potentially do?
Absolutely. David, I feel like a lot of times with entrepreneurs is we start our businesses because we love what we do, right? We
Absolutely.
love flying, we love wealth advising, we love, our craft. We just love what we do, right? What happens is that we love what we do so much. We love just helping people, which is why we started our businesses, because we wanted to help people be better, is that we will do it for free. And that's exactly what happens for our entrepreneurs is they end up doing it for free. And what I mean is they work hard, they super serve their clients, but then they look back on their life and they're like, what do I have to show for this?
Sure.
And I remember when I first started my practice, and I remember opening up my office, and I remember my first client coming through the door, and I was so excited. Like many of you guys who have businesses might have remembered that nostalgic feeling. And I remember he pops down the chair across from me. He brings me a shoebox and he says, whatever you do, I don't want to pay any taxes.
Okay.
And I look at him and I gracefully grab his shoebox away from him, and I'm unraveling all his receipts, and I get to the bottom of this shoebox, and there's this crumpled up piece of paper, and it's called a P&L, profit and loss. And I'm looking at this profit and loss. I'm looking at the receipts that are supporting this profit and loss. And I'm like, well, don't worry, sir, you're not going to owe any taxes because you didn't make any money. Like your expenses that I have receipts for exceed your revenue. There's no tax when you didn't make any money.
That's one way to not pay taxes.
And he goes away. He comes back a couple of days later. He signs his return. He's getting a couple $1,000s in earned income credit. It's that credit that you get for showing up to work, but not making any money. And he thinks that I did a really good job. And I think that I did a pretty good job too. Well, David, next year he comes back. He's bringing the same shoebox. The man recycles, okay? And he plops down on my desk again, and he pushes this receipt box to me. And he says, whatever magic you did last year, do it again this year. And so again, I get to the bottom of the shoebox and new crumpled up P&L. And I said, well, don't worry, sir, you're still not going to pay any taxes because you didn't make any money. I mean, again, your expenses exceed your revenue. He comes back again. He gets an earned income credit. He thinks I did a good job. I think I'm the best accountant in the world. Third year, David, he comes back again.
Okay.
But this time it's not funny. This time I'm emailing him. I'm getting responses at 11:30 at night. He sends me like weekly check-ins now, and
Uh-huh.
I see everybody on this P&L, all this payroll. People are getting paid, and he's not getting paid.
Okay.
He doesn't own his own home. He is renting a car. He doesn't own his own car, and literally he has nothing to show for all his work. He
No
still
assets.
manages to say,
Mhm.
do the magic again, don't pay taxes. But it's just not funny this year because I'm thinking to myself, I'm planning on retiring one day, and I'm concerned about you because, yeah, you're getting earned income credit, but you're not getting Social Security. You don't have a
Right.
401k.
Right.
The government's not going to even take care of you one day. I hope your wife, I hope that she's making enough money in her Social Security so you can benefit from, right? That 50% one day.
That is horrible. That is horrible. So share with us, it's right in the behind you there, your book, Profit First System. Share with us, all of us that's listening and viewing this, what is that?
Right. And so this is the incident that tripped me up to make me go,
Okay.
okay, we need something that's going to change America. We cannot have these entrepreneurs living in entrepreneur poverty.
Okay.
And I wish that he was the only person that came to me that year with that attitude, but it was
Mm.
entrepreneur after entrepreneur after entrepreneur. Like there was a epidemic of entrepreneurial poverty. And later on, I would meet Mike McCallitz and I would learn about this amazing system called Profit First. And what Profit First does is it teaches entrepreneurs literally to take their profit first. Meaning that
Okay.
profit is not a random event where you sell a lot, you pay your bills on time, profit naturally happens. No, profit does not happen that way. That's why 65% of small businesses close within 10 years because profit does not happen that way. Profit is intentional. And what Profit First does is it teaches us that, first of all, we have to work with our natural biological systems, right? Meaning that we
Sure.
have to make it easy to achieve profit. It's not just this accounting phenomenal on a P&L and balance sheet and QuickBooks. There has to be a physical method of creating profitability.
Mhm.
And what Profit First does is it works with something called Parkinson's Law. And what
Okay.
Parkinson's Law teaches us is that work expands to fill the time available for completion. So if you're given
Sure.
2 weeks to finish a project, how long does it take you for you to finish that project?
2 weeks.
Exactly. Now, if your boss says, I need this on my desk by 3 o'clock today, what time do you get it on his desk?
3 o'clock, hopefully, if you want to keep the job.
Exactly. We're efficient, right? Well, Parkinson's Law expands in so many other directions. In entrepreneurship, when money is flowing, when cash is plenty, when the world is full of PPP loans and ERC credits, right?
Sure.
My entrepreneurs are asking me questions like, Suzanne, I feel like this is my year. This is going to be the year that I finally outgrow my current office location. And I feel like I need to expand into this new office space. Now, I know it's above my budget, but I feel like this is going to be my year. Or they go,
Okay.
Suzanne, what about that corporate car?
Okay.
I needing a tax write-off, and I saw something on TikTok that I can get a $25,000 tax write-off if I just buy this gas guzzler here, this Ford F-150, and I'm a dentist office. Now, on the other hand, when cash is not flowing, right, when money is tight, right, we're in this economy, we're like, who's going to be president? And like right now
Sure.
the market's up, but what happens tomorrow, right?
Yeah.
My entrepreneurs are asking me different questions. They're asking me questions like, okay, what expenses can I cut today? Because right now I'm struggling to make payroll. My sales just aren't there. Like, what can I cut today? Or how do I gracefully let go of some of these lovely people that have been with me through all this time? And the reason why the questions are different is because the cash availability is different. And so what
Sure.
happens in Profit First is we're going to create an illusion of scarcity. We're going to work with Parkinson's Law.
I see.
And we're going to
Excellent.
do this through the use of bank accounts.
Okay.
And you guys may have heard of like Dave Ramsey's envelope budgeting system because you're finance people. He has this envelope system. As soon as you get your paycheck, put your money into an envelope, right? You've got an envelope for groceries. You've got an envelope for rent or mortgage. You've got an envelope for dining out, but you have an envelope for every single purpose of your life.
Yes. Budgeting. Hmm?
And we're going to do the same thing
Okay.
and profit first, right? But instead of having envelopes, because that would be dangerous, we don't want anybody walking around New York City with envelopes of cash. What's going to
Sure.
happen in profit first is we're going to have bank accounts,
Okay.
and we're going to have 5 different bank accounts. And what's going to happen is money is going to be deposited into one bank account throughout the month. We call this the income bank account.
Mhm.
And then twice a month, you're going to allocate to different bank accounts according to their pre-designated purposes. So one of the first bank accounts you're going to allocate to is going to be your profit bank account. And this is literally your profit. This is physics. If you move money into a bank account and you don't touch it, I promise you, you have profit.
Sure. Absolutely. Pay yourself first. Yes.
Exactly.
A lot of entrepreneurs seem to forget that.
Exactly. And the next bank account that you're going to fund is going to be your owner's pay account. So many times when I meet entrepreneurs, the first thing they tell me is, I ask them, who's your most valued player? Who's that MVP on your team that they walked out tomorrow? You would be crying.
Absolutely.
And they
Yes.
tell me it's
Key person.
Johnny, it's Susie, it's Mike, but none of them will ever say it's themselves.
Mm-hmm.
But the
Absolutely.
reality is, if you didn't start this business, nobody here would be getting paid, right? This business exists
Yes.
because of you today and the work that you've done as a founder. And so, just like you would never allow Johnny and Susie and Mike to go without a paycheck, you shouldn't either. So, one of the
Mhm.
next bank accounts that you're going to allocate to is going to be your owner's pay accounts.
Okay. Excellent. So let's talk a little bit about your extensive experience, both at Arthur Andersen and KPMG, 3 top 4 global financial companies in the world. How has the global tax planning landscape that has evolved over the years that you've seen, especially for small to medium-sized business owners and high net worth individuals? How has this evolved from your perspective?
So taxes looks a whole lot different today than what it did 10 years ago, right? Even the return looks different. There's like Schedule 1,
Yes.
Schedule 2, Schedule 3. Like we used to just have one two-page schedule and it had like a Schedule A. Interestingly, they still
Mhm.
tell you the same information, but even the tax return looks different. So there's been
Yes.
a lot of changes that's happened. I would say from a high net worth perspective, especially with entrepreneurs, because I work primarily with entrepreneurs,
Okay.
is that, one of the biggest differences that I'm seeing here is that, we are focusing more on when we work with our clients, how do you increase your wealth by not necessarily increasing your expenses, right? And
Sure.
reducing your taxes. That's the game that we do in Profit First. For example, you know, um, in Profit First, we'll never, what happens to me in Profit First, a lot of times when clients come to me, they have a cash flow issue.
Okay.
And then 6 months later, instead of a cash flow issue, they have a tax problem because they've been allocating money to the different accounts. They're allocating in accordance to a percentage. So as revenue grows, so does their
Mhm.
profit, so does their owner's pay. And what's happening is that they have elevated themselves into a whole different tax bracket in many
Mhm.
of these cases. And so, unlike your traditional accountants who will tell you go out and get that Ford F-150, go ahead and get that gas guzzler, we're going to say how do we increase that net worth while reducing your taxes? And so one of the first things we'll ask them is what's your long-term goal? And a lot
Great
of my
question.
entrepreneurs will tell me, you know, I want to increase my profits, right? And one of the
Sure.
best ways to increase profits is to retain your top talent, retain your A players. Because reality is the longer people are with you, the better they get with their jobs, the more efficient they get, the more ideas that they get. And
Sure.
so one of the things that's important is to be able to say, okay, well, if retaining your talent's important, let's look at a compensation plan that retains your talent. And so what we'll look at is maybe we'll get into a 401k, but not just a safe harbor 401k. We want a 401k that your employees are gonna have to stay with you in order to vest. Maybe they have to stay with
Yes.
you for 6 years.
Sure. Yeah. Vesting
And if
schedule. Absolutely.
exactly, and if they get lured by the shiny lights of a competitor and they're not there to fully vest, guess what happens to those contributions?
Because they don't get to keep it.
Exactly, they forfeit those contributions, right? And now as a business owner, I've gotten a tax deduction all this time, right?
Sure.
Because I've actually sent money to the 401k trust.
Absolutely. Good. Good one.
But if they forfeit those contributions, they either stay in the trust, right, where they can be used for future allocations to other employees that are more loyal,
Excellent.
or or if I'm the last one standing in my company when I'm ready to retire, they're my contribution. It's all mine.
Sure.
And so now
Absolutely.
I've won both ways. I either got a long-term employee who's
Mhm.
a brilliant performer, or I've got a bigger 401k.
Sure. Absolutely. Fantastic. Um, let's continue to talk about the profit first methodology. It has obviously gained some traction, but some people may find it to be difficult to implement. Uh, share with us some of the practical steps that business owners can take to make profit first work in today's economy.
So, it's funny because when people ask me, like, what's the hardest part of implementing profit first, I
Yeah.
always like have to give a little chuckle. And the reason why is, people will get excited about starting profit first, but then they'll get stuck on questions like, where do I open my bank accounts or how do I reduce my bank fees? And I'll get
Mhm.
stuck in this analysis paralysis. But the reality is, you just have to get started. And for
First step.
many of us,
Yeah. Mhm.
it's starting for 1% allocation into your profit bank account from your revenue, right? 1% to start with 1%. And if you're already profitable and you're already at 1%, then start for 2% and then just build it from there, right? David will tell you it's the daily habits, it's the dollar saved that builds the
Yes.
millions. Nobody ever starts
Yes.
out where they want, they start with where they are. And so
Absolutely.
don't get stuck in analysis paralysis. Just get started today. Start with 1% and just get moving. The
Okay.
next thing I would say is,
Yes.
start with the low hanging fruit. I
Good.
remember during COVID, I remember walking to my office and I saw all these magazine subscriptions, and they were still wrapped in plastic.
Mhm.
And my kids, for their fundraisers are always selling magazines and they don't tell you that these magazines auto renew. And so I was getting all these magazine subscriptions
Mm.
and
Mhm.
nobody was reading them because everybody was home on Zoom.
Right.
And and the reason why I share this story is cut the things you're not using. Cut the things you're not using. If you got a great office space or and you're not going in there, cut that, right? If you're looking at your home, like what things are on my auto renewal? Like these days I find myself a victim of Apple subscriptions,
Oh,
like
yes.
I sign up for an app and like I forget that I sign up a year later it's charging me again another $29.99,
You're not the only victim. Absolutely. Fantastic. So as yourself, someone who has built a successful firm, what have you seen or have been the keys in terms of your financial principles and the lighthouse that you think are essential for you to become successful, generate a long-term type of wealth and a path to good economic times, even when we sometimes are in a period of uncertainty.
I think the biggest creation of wealth for me is, and it's hard when you're first starting out because you don't see it. You don't see that it's the one step at a time. It's the dollar, say the auto draft out of your bank account that's funding your retirement or funding your investment account. You don't see that, right? You just say, okay, all right, I guess that's no McDonald's today, is all
Sure,
you see.
sure,
But it's literally the dollar save that builds the millions, right? It's putting things on auto, creating systems where that savings are automatically happening, where those investments are automatically happening, right? Even though you don't see the outcome. And it's just putting in the daily habit that will pay off in millions one day. I mean, it's the time value of money, right? David can tell you all
absolutely,
about the time value of money,
absolutely.
the stock market just returned 30% so far this year, right?
Yes,
Not every year is
yes,
going to be 30%, but it's
right,
the time value of money.
absolutely,
The other thing is get help where you need it. You
right.
know, a lot of times when I meet entrepreneurs or business owners or people in general, they're holding on to what they
Mhm,
have, right?
mhm.
They don't want to invest. Well, the reality is to grow, you have to invest. You
Sure.
have to measure the ROI, the return on
Okay,
investment, right?
okay,
It's not just investing money and throwing away, it's also making sure it's working, right? But don't be afraid to hire that person to help you get to that next step. So, if David knows money, call David to help you with the money, right? He will help you get there faster than you doing it on your own, right? Sometimes you
yeah,
have to access that knowledge to go 10 years ahead of where you are today, right? Because time is money, right? And so investing in the who, not just the how, but the who to help you get there is also really important.
Excellent. Excellent. So for entrepreneurs that are looking to build a legacy and prepare for their retirement, what are some of the unique tax strategies or wealth building approaches that you would recommend that may not be on their radar, or for that matter, on the radar of that are the people that are listening and seeing this podcast today?
So one of the best gifts that my dad gave for me, and I did not see it when I was 14, was he hired me to be the bookkeeper in his business.
Oh, awesome. What kind of business is that?
He actually owned a CPA firm for
Oh,
43
he was a CPA too.
years. He
Okay.
did. He had all the
Awesome.
Chinese restaurants in Cincinnati at the time, you know?
Aha.
And I got to look under the hood of all these companies. I got to see all the Thomas Cisco's that were visits that these out restaurants were getting, you know, who delivered their food. And I got to see what was working and what wasn't. And there's an author named Malcolm Gladwell. Malcolm Gladwell says it takes 10,000 hours to become an expert at something. So imagine being 14, turning 24, and when your peers were just getting out of school, be like, okay, I'm ready for some real stuff now, right?
You're
I already know
leaps
how
and
to
bounds
use this
ahead of
stuff.
them. Absolutely. Leaps and
Exactly.
bounds.
Best gift. But not only was it a gift from an intellectual standpoint, but it was a gift from a financial standpoint too. Because first of all, you know, it's a tax write-off for your children, depending on the entity that you're actually operating in. It may be a tax-free transaction, right? Our taxes are on a graduated scale.
Yes.
And if your children are making less than a standard deduction,
You're
depending on the
good.
type of entity you're in, that's a zero tax bracket. So you just effectively just transferred money from the 37% tax bracket into the 0% tax
Zero.
bracket. So
Yes.
now young Susie can go buy her own ballet classes and her own slippers
Yes.
and pay for her own
Yes.
homecoming HOCO, right? Um, and
Fantastic.
and and she's getting great work experience.
Absolutely. What a great example of tax mitigation strategy. Fantastic. Um, Anything else before we go on to the next
Yeah.
question?
Well, from taxes, we can talk taxes all day, Dave. You know, what do you want to know?
Well, what let's continue on. So you've been at Goldman Sachs 10,000 Small Business and Profit First Professional Firm of the Year. Have these experiences shaped your understanding of wealth building and strategies for minority-owned businesses, in particular?
So minority-owned businesses,
Which
you know,
I am
and
one.
that yes, it's a passion of mine. I'm actually the author of Profit First for Minority Business Enterprises that Mike
Awesome. Yes.
McCallix and I wrote together.
Okay.
It's a Publishers Weekly editor's pick book. Kirk is reviewed, so it's been highly reviewed. And it's part of my legacy. You know, $1 for every book. It's actually going towards charities, going to Hope Worldwide, where we send
Mhm.
um, girls to school in Zimbabwe. And every year since the book has been published, we've sent an entire classroom of girls to school, which is life
Awesome.
changing for them and their
Sure.
families
Sure.
to be able to have that opportunity, which is extremely important for me. You know, to see that legacy change in other people. But I think from a minority perspective, a lot of times we're what we call Gen 1,
Mhm.
meaning that we're first in our families to go to college. We're first in our families to start a business. Some of us become the first millionaires in our family, right?
Sure.
And so, you know, it's important that, you know, we get access to information that we might not have, right? We may not have had our families may not have be able to pass down the knowledge that the Rockefellers are able to pass down with their trust accountants and things like that.
Sure.
And so this book really provides that information that we might be missing from a legacy passed down perspective. I also think that profitable minority businesses is extremely important because, you know, I remember I lived in Chicago when I first got out of college. And I remember taking the bus down Michigan Avenue, if you guys are familiar with Chicago. And this is before South Loop was nice. And I
Okay.
remember like the bus driver, you know, that was because had taken a bus from Lincoln Park and I got to end the route and he said, "You need to get off now because I'm turning around." And I said, "Okay, well, I'll take the next bus." And I took the next bus, could continue down Michigan Avenue. And it's the same street. I thought I'd see more of the same. But what I saw was the windows became boarded out, right? I saw
Mhm.
more shopping carts being pushed. I saw
Sure.
more poverty.
Sure.
And one of the things that occurred to me is how do you change poverty? Because obviously less than 2 miles away, because Chicago's not that many miles from the center, right?
That's right.
Was commerce and busyness and
Oh, yeah.
obviously financial wealth. And it occurs to me that the way that we change that is by creating profitable businesses.
Mhm.
Because as profitable businesses, we not only inspire our own children and change their legacy, but we inspire our neighbors' children who might come and work for us, right? And if mom can be a CPA, maybe I can be a CPA, or my neighbor's mom's a CPA, or maybe I can be a CPA or a physician one day. And
Sure.
so creating profitable businesses is extremely important. Now, in my book, I do talk about things that minority businesses do face. We talk about government contracting. Not
Okay.
all government contracts are good contracts, right?
Okay.
Sometimes saying no to the wrong opportunity is more important than saying yes to all the opportunities, right?
Sure. Absolutely.
And s- and so we talk about how to price those, how to know when to walk away.
Mhm.
We talk more about tax strategy for you guys that are
Mhm.
looking in further investing, that want to buy buildings, get into real estate. There's cost
Mhm.
segregation studies out there that you can get
Absolutely.
into. Another great way to depreciate your building rapidly while getting massive tax deductions, but not necessarily really increasing expenses. Not like the building went away
Mhm.
just because you took a depreciation on it, right?
Sure. Sure.
And so, we talk about how do we implement sound tax strategy that builds our net worth while not necessarily decreasing expenses. So I pretty much give you the secrets of those that know, right, in that book.
Awesome. I'm glad you covered your book, Profit First for Minority Business Enterprises. I am going to look in that and probably buy a bulk and give that to some of my existing clients that I serve, which will, I think, hopefully they'll be able to take a lot out of it, and which I'm sure they will. Um,
Thank you.
how do you approach wealth preservation for clients who want to ensure financial stability and generational wealth amidst today's fluctuating market conditions? Again, going back to unpredictable and ever changing, especially ever changing rapid in that type of an environment.
So I think first of all, it's following the system, right? Following the system
Mhm.
in any economy. And that's the reason why profit first works in any economy.
Okay.
Whether you're doing profit first for you personally or you're doing profit first for your business, it can work for you in any economy. If you're getting revenue, if you're allocating a percentage of your revenue to profit, to owners pay, to tax, to operating expenses, right? And
Mhm.
it's a percentage of revenue, not a fixed dollar amount, that means you can be profitable in any economy.
Absolutely. Absolutely.
And so it's the habits, it's the systems that's going to create your results, no matter if it's a little bit of profit or a mountain of profit, right? You can be profitable in any economy. And so, like, if you're setting up personal systems to save, right? You're auto drafting from your account to go into your investment accounts. Again, it's a system. And you
Sure.
will save in a great economy and you will save in a not so great
Mhm. So good.
economy,
Yeah.
right?
Low economy, bad economy. Absolutely.
Exactly. And, for business owners, your business is also an asset. I recently sold a business 2 years ago and it was
Oh,
an asset. It allowed me to retire at age of 46 and be a fractional CFO to whoever I want to choose to be a fractional CFO for. And
that is
again,
awesome.
thank you. And again, you're able to, when people buy businesses, they buy a cash flow positive
Positive.
business.
Absolutely.
And again, you
That's
become cash flow positive by the daily habits.
It really is the ingrained habits that makes us or potentially breaks us, isn't it?
It
Uh,
is.
so what do you see in terms of in your in your day to day being a fractional CFO, the primary challenges that you continuously see entrepreneurs face in terms of retirement planning, and what proactive steps do you think that they can start preparing now, even in a election year or in a economy that is going to become more uncertain probably down the road?
So I work primarily with 7 to 9 figure businesses. So,
Yes.
um,
The
they
7 to 9 figures, is that revenue or is that
revenue,
profit? Okay.
Revenue.
Thank you.
And so their challenges are going to be a little bit different than a startup business.
Okay.
A startup business, again, it's just creating the habits. Same with a 7 to 9 figure business, creating the habits.
Okay.
Where it gets a little bit more complicated with a 7 to 9 figure business is that you might not be the person that's writing checks anymore. You might have an accounts payable person writing checks, or you might have managers that are running around with corporate credit cards, right? So budgeting becomes really important. Tone at the top becomes really important. Putting in barriers and boundaries becomes really important. Accountability becomes really important. And so those are the challenges that we start to see at 7 to 9 figures. Also, reinvestment becomes really important. To get to 7 figures, you might have to burn through a couple of souls on sneakers, knocking on doors and making sales, right? To get
Sure.
to from 7 to 8 or 8 to 9, you're talking about a sales team. You're talking about reinvestment of funds for advertising and marketing, right? And getting a 10x on those proceeds and on those marketing investments. And how do you make sure that you're getting that ROI and make sure that marketing is working, right? So it's a little bit different of a scenario that happens there. But but I say it starts with having the system, David. It starts with
Okay.
having a system in place.
And that system is written in your book,
Exactly.
which I think is going to be very, very important, whether it's the Profit First for Minority Business Entrepreneurs or the book for the Profit First methodology. So love that. I definitely will be buying a book of this and passing it on. I know several people, just two handfuls so far that I can pass that on. So it'll be exciting for me to give that away.
Thank you.
Looking ahead, what financial trends or potential tax law changes do you think business owners should be preparing for? And how can they best adapt their strategies to stay ahead and be financially secure?
That is a good question, David. You're right. It depends on who becomes president and a whole lot of other things, right?
Yes. We're not going to get political on this podcast because it is really polarizing. So we won't talk about that. But there are going to be changes no matter what. So whether it's the left side or the right side, or the green side or the blue side or the yellow side and the red side, talk to us.
So one of the things that we do in Profit First, one of the bank accounts that we're going to fund as part of our transfers that we're doing every single month is going to be your tax bank account.
Okay.
And, as a CPA, one of the things that used to always puzzle me was you would see on April 15th, these entrepreneurs literally freaking out, like having a panic attack. They would call in their CPA asking for an installment plan. I've even seen some people rob their IRA accounts in order to make a tax payment.
Oh,
right.
no.
I see David go like, oh, no, exactly. Because not only do you pay the tax on a distribution, but you pay a 10% penalty on an early distribution from an IRA.
Robbing
But
the future for the present never is a good idea.
Absolutely not. But the good thing is, for those of you guys who are going to be now adopting Profit First, taxes will never be your problem again. And they're never going to be your problem again, because from now on, be allocating to a tax bank account every single month.
Absolutely. That is the first step to indoctrinate, to build a good habit. Fantastic. Any final words of wisdom that you would like to provide the listeners and viewers that are thinking or just started their entrepreneurship?
So I would say, and this is for those that are entrepreneurs and those who are not, is, what I would recommend that you do, and this is a great exercise to do at least annually, is to think about, how do you spell happy in 10 years from now?
Excellent. Okay.
Don't go 50, don't go 100, just go 10 years from now. What do I want my life to look like in 10 years from now? What do I want my life to look like in terms of work-life balance, vacations, money? What do I want my life to look like? And the reason why that is, when you create that picture, that Polaroid picture of full color of what I want my life to look like, there's something that happens on the psychological level. That conscious imprint becomes a subconscious imprint. And you guys may remember from biology classes and psychology classes, those dendrites and synapses that happens on a subconscious level, right?
Sure.
Those create chemical reactions that create movement, that create action, that move you towards those goals. And so what you think about, what you want, what you tell your mind, what you allow yourself to dwell on becomes your outcome. And so start with, what do I want? What's important to me? What do I want to be in 10 years? And every action will start to align itself with where you're going.
It's like the Plinker chips. They all fall eventually aligned if a set of metrics that you want to meet, goals that you want to hit. That sound about right? I love it. I love it. I love it. Thank you so much. Thank you for joining us on this episode of the Jet Setting Wealth Advisory Podcast. Absolutely a huge thank you to Suzanne Mariga for sharing her wealth of knowledge, tax strategy, wealth optimization, business growth, especially to the entrepreneurs. If you're interested in learning more about Suzanne's services and how she can help entrepreneurs achieve financial stability and success, please be sure to go visit www.marigagroup.com. It will be on your screen. We appreciate you and your support and can't wait to have you with us for our next episode. My name is David Yu, airline pilot, founder, and wealth advisor of DTY Wealth Planning Solutions. Don't forget to subscribe and please leave us a review. Until next time, keep your financial goals in sight and your strategies on course. Goodbye.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.